Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Monday, May 11th, 2020. And our top stories today: America begins to reopen and markets rebound, and also strategies to generate retirement income. And joining me now to discuss this and a lot more, Kevin Simpson is the founder and chief investment officer for Capital Wealth Planning. Kevin, thanks so much for joining us on the program this morning.
Thanks for having me, Jeff. Good to be here.
It's great to see you. And before we jump into things, how's everything in Florida? How are you all doing with the pandemic and dealing with these tough issues that we're all challenged by?
Well, you know, it is difficult, I'm sure, for everyone to be sequestered. But if you're going to have to be inside or at least remain isolated, it's not the worst place in the world to be in Naples, Florida. You know, I look out the window, we've got 90 degrees and sunny, and just 2 days ago they opened the beaches. So we're suffering through it.
Yeah. It seems that we're making progress around the country. And Kevin, I'm glad you really could join us, because so much has been happening over the last 2 months. I feel like we are in, when you watch a tennis match and we're going left to right, and we're getting kind of beat up by the market. And I wanted to start with getting your assessment over the last 60 days, maybe the last 90 days, as we've gone through really a lot of ups and downs.
Well, you know, maybe that's the understatement of the spring, because we were taking a massively successful economy into this and then purposefully shutting it down. Unbelievable for sure. But to see the stock market have that massive a pull down over a 3-week period, never in history have we seen such a ferocious decline over that short a time period. So I think it stands to reason that some of this recovery is in order, because maybe we're just so oversold so quickly. But the thing that Wall Street hates more than anything in the world is change and uncertainty. And when we don't know what to expect, it's very, very difficult to do forecasting. So as crazy and volatile as things have been, I think all in all, it hasn't been too bad.
Yeah, I think you're right about that. And in terms of, people out there saving for their retirement, they're saving for, their child's education. We've got 30 million people out there that have filed for unemployment. Presumably that number is going to go up over time. I know the federal government stepped in with the Paycheck Protection Program and some other stimulus. But how are you and the folks at Capital Wealth kind of looking at the recovery period? And I want to talk about your, some strategies, retirement strategies in our second segment. But how are you looking at the timetable for a potential recovery?
Well, it's still difficult to put a number on that very specifically. I think a lot of us are using educated guesstimating, because we know that we're anxious to get back out there. The consumer was so strong heading into it. I mean, we had an amazing December. It seems like a lifetime ago, but we were in a New Year's rally. We were seeing corporate earnings beginning to appreciate. We were seeing historically low unemployment. A lot different than what we just saw on Friday with respect to the jobs report. But the consumer can fuel everything. So as we reopen this economy, as we see people engaging in spending and consumption, that'll really tell the tale of how long it takes to go through this and how successful we will be. I think ultimately we know it's all going to work. We know we're going to get back to normal. It's just a real question mark as to how that happens and what that reopening looks like.
I think and the most important thing is that it's going to vary. You mentioned the beaches are open in Florida. I'm in New York, and as the time that we're recording this, nothing is reopened. So there are definitely pockets of the country that are reopening, and that presumably, Kevin, will drive how the market responds, because the market doesn't, as you said, doesn't like uncertainty. And I would argue that Main Street America, all of us don't like uncertainty as well. We want to be in our zone. But when you look at the market, Kevin, are there segments of the economy, for example, the tech sector, that seem to be better off than presumably like the service economy, the hotels, the airlines?
Yeah, I mean, I think there's some really obvious winners when you shut down an economy completely like this. that are going to thrive and survive. You mentioned technology. We're not sitting down next to one another. I'm sure it'd be great if you were here in Florida. But the technology companies have kept us together and really made this manageable. Mm-hmm. We're seeing other companies doing exceptionally well because they're able to thrive in this economy. Amazon has surely been benefiting from the 40 boxes we have out front every day. Companies like Walmart are doing very, very good business. Johnson & Johnson, Procter & Gamble, Clorox. If you think about some of these names, they're really benefiting from what's been happening. And to your point, there's certainly companies that are suffering tremendously, and who knows how long it will be before people are lining up to get on a cruise line.
Yeah, I think people are, I think that's going to be part of the thing about, last week we talked about virtual conferences now being the norm. I think getting back into some level of normalcy is going to be a challenge. And so doing football games and baseball games and theater and all the things that we're so used to, it's going to be really challenging. Sitting in a restaurant, an example, going to be really challenging. Kevin, you have a diverse list of clients. I mean, all over the gamut. What are you hearing from them in terms of concerns, whether they're a family that's retired, whether they are an institutional investor looking to work with you? Are they giving you are there some common themes there that you're hearing?
What's interesting about this correction is that I think people are a lot less scared than they were in 08 and 09, partially because this was maybe a shutdown by design and maybe even a recession by design and a correction by design. But I think people are a lot more comfortable with the fact that this is something that we can get through. Definitely a vaccination would solve 90% of this very, very quickly. And I'm sure we have great scientists here in the US that are going to deliver that for us. But what I'm hearing most in terms of the concern is how with this low interest rate environment, are we able to take an income stream from our portfolios that will allow us to remain in retirement, or for those folks that are thinking about retirement, is this something that we're now going to need to put off a little bit because interest rates aren't at 7 or 8%, they're at 0.
Yeah. Well, Kevin, I want to take a quick break. I think you teed it up perfectly. When we come back, we're going to talk to Kevin about possible solutions, possible investment ideas and themes that may be of interest to those near or in retirement. So you're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America. and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Kevin Simpson. He's the founder and chief investment officer for Capital Wealth Planning. Kevin, thanks so much for sticking around this morning. It's great to get your perspective. Obviously, lots going on in the market. And we kind of ended the first segment talking about those nearest to retirement and offering some ideas ideas that they should consider. But let's talk about the notion of retirement, because we know that retirement today is really different than retirement of yesteryear.
Yeah, if you think about what's germane to your audience, there was a time when we wouldn't have a need for this podcast. People would go to work, they'd be at a manufacturing job, and then, they would just die at their job. Kind of push them out of the way, put someone else in, and retirement wasn't really a concern. Then we started to create Social Security, and that made for a very nice retirement. You'd retire at 65, you'd conveniently die at 72. You'd have 7 years of a very modest income stream, but it was the American dream. Now, instead of conveniently dying after 7 years, we're living for 3, 4, 5 times that long in retirement. And the challenge is that the cost of living continues to increase as we go through this really long, great retirement. And so few of us these days have defined benefit plans or pension plans. So now we have to make sure that what we're saving is going to allow for us to continue to spend for not 7 years, but hopefully 30 years and beyond.
And this is really I think you brought up something that I refer to as the holy grail, something that we're all kind of searching for, is how do you draw down your account balance? How do you maintain income over that long period of time? And I know you've been thinking about this, you and the team at Capital Wealth have been thinking about this for a long period of time. What are some of the ideas and concepts that you're vetting with clients?
Well, if you think about the concept of an increasing income stream, it's also an easy process when interest rates are at 7, 8, 9%. Unfortunately, for fixed income investors, we're not quite there right now. We're a little closer to zero. And that poses the problem because nobody's reducing the cost of goods because interest rates are down. Things continue to appreciate over time, and we need to factor in for that inflation. So what we do at Capital Wealth Planning, and it's nothing that we necessarily created, it's really based on the foundations of Benjamin Graham and the Intelligent Investor, which is, let's buy great companies, let's invest in awesome companies with strong balance sheets and great cash flow, and let's make sure that we invest in companies that pay and increase their dividends over time. So if we look at dividends as a component in an income stream for retirement, and specifically for companies that are associated with dividend growth, then you have an opportunity to participate in a rising income stream over time, albeit more risky than an insured bond, because when you invest in dividend paying stocks, well, you're investing in stocks.
True. And so one of the, there's this kind of conversation that always happens. Annuities, right? Annuities are traditionally have been something that they like the predictable income, but they're also concerned about the lockups and the fees. And some of that has been taken away through the transparency and some of the changes in the regulatory environment. But how do you kind of reconcile that against what you're talking to clients about it? Because I think both solutions are in fact that solutions for or potential opportunities for clients.
Yeah, Jeff, I think your point is completely valid. You don't want to have every egg in one basket. No strategy is perfect for every environment. So if you can blend and allocate amongst different solutions, then maybe you can begin to create the best of both worlds. where our strategy, investing in individual stocks, has market fluctuation and market risk, it also has tremendous transparency and tremendous liquidity. So to the extent that you combine that with fixed sources of income for retirement, I think that makes great sense for individuals over time, because no one technique is going to be perfect in every single environment.
And do you think that when you talk to your clients, and I'm assuming, all different backgrounds, vocations, there's an educational process that has to happen, I'm thinking, and I want to get your perspective on this, about this very concept. I feel like most Americans, including people that are professionals in our space, don't really have a good handle on how all these pockets can work together. And we're still talking about, for example, the 4% rule. But does that rule really apply for taking money out of your account, knowing that you're going to live 20, 25, 30 years in retirement?
Yeah, the 4% rule was really easy when interest rates were at 8%. So we're challenged because you can find income, you can find yield. But the problem is you take greater risk, the higher the quest for yield becomes. So I think when we, speaking for us, when we look at companies, we try to invest, like I mentioned, in the greatest companies in the country, and we look for those dividends as a means of income. We also complement that with a covered call component that further enhances a little bit of income stream by also protecting a little bit of downside. Now there's a trade-off, you don't have all the upside with that. But when you talk about education and awareness, it's one thing to talk about risks associated with the stock market. As you begin to add other elements to it, I think it requires a little more education. But people are looking for solutions, and I think they're becoming a lot more attuned to what is it I own, where is it, how do I get my hands on it, and what are the risks.
And that really is the start. I mean, if you can embrace that as an individual and an investor, just a person, take an interest. Doesn't mean you have to be a professional and an expert in investing, right? You have to be prudent in finding someone and partnering with somebody who is astute and who can be your advocate and can be that fiduciary on your behalf to make sure that you have the right ideas presented to you.
Yeah, you think you hit the nail on the head with the fiduciary. Our primary clients are financial advisors around the world who work with retired individuals. And the reason they do such a great job and they're so helpful is that they're able to teach their clients what they own, and they can explain it.
Yeah.
If you don't understand what you have, it might not be the best investment.
Yeah, I mean, I think a lot of people in that regard, in selecting a financial advisor, selecting someone to work with, it has to be a really good fit, and it takes time to work through that and to find the right fit. Just because somebody works for somebody else, meaning a financial advisor works for even a relative, you just may not mesh with that person.
Yeah, well, sometimes you don't want to work with relatives. But speaking of relatives, I'll use my mom as an example because she's invested in our strategy. Gone through a period of unprecedented volatility we haven't seen since 08 or 09 recently. And you always judge the psychology of the investment community by, how many times does mom call about your investments? And I'm proud to say that we've had very few conversations recently about, is the stock market going to come to an end? Is the world going to come to an end? And are my investments okay? Our investments, our stock holdings are lower today than they were at the peak in February. They're much better than they were at the March 23rd lows. Whether or not they retest those lows isn't as relevant or as important. Doesn't matter where they are over the next week or 2 weeks or month or 2 months. I think it matters a great deal more where they are 1 to 2 years into the future. So when you look at the portfolio and you look at my mom's account and you see that we own companies like Johnson & Johnson and Procter & Gamble and Walmart and Disney, it's this mindset that we have these great companies, but more importantly, we're going to get paid while we wait. They have tremendously strong balance sheets, great free cash flow. And I think it helps people sleep at night when they have some understanding about where the money is.
Yeah, and they can relate to those companies. They're not unknown names. They know those brands. They know what they deliver because they've been around for a long period of time. Kev, we're going to have to leave it there. Really appreciate your analysis in the first segment on the markets. Really interesting. And then also education about withdrawing money from your account. Take care, stay safe, and we look forward to having you back on the program very soon.
Thanks, Jeff. Thanks for having me.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think that we should talk to? Drop us a line. And don't forget, for all the news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Attention! The Centers for Medicare and Medicaid Services has officially authorized new benefits that Medicare Advantage plans may include. To get the benefits you deserve, you can call the Medicare Coverage Helpline.
Hi, I'm Joe Namath. If you're on Medicare, this is important information. I called the Medicare Coverage Helpline and they instantly looked up my coverage. In this one simple call, they offered to enroll me in a plan that includes rides to medical appointments, private home aides, doctors and nurses' visits by telephone, and even home-delivered meals. The plan also includes dental, vision, hearing, and prescription drug coverage, all at no additional cost.
Don't delay. Call to see if the new benefits are available in your area.
Call the number on your screen now. It's free.
Call 1-800-757-1451. That's 1-800-757-1451.